All right, welcome back. Welcome back to another Earnings Lottos Power Hour Live. I'm your host, Pete. As you know, for the next hour or so, we are going to be using earningslottos.com to find the best earnings movers that report this afternoon and tomorrow morning. Like the video, subscribe to the channel, please. It lets me know that you like this content and it is working for you. That's the key part. We want to make money here, and we're going to find the best, highest quality earnings setups. We don't want to just throw our money at everything reporting earnings, but we want to make sure that we're putting our money into the best possible earnings setups. So that's why we're here. Go to the website earningslottos.com. You can do it on your phone, on your tablet, on your computer. It takes 30 seconds to register. Sign up for an account. We'll send you a confirmation email. Once you confirm, then you're into the deep dive. You are into Earnings Pick'em. You can play Pick'em with us. You can view everything I'm looking at here on the deep dive. So go ahead and do that right now. So that way you can look at your phone and look at other stocks that I'm not maybe talking about at that moment. So without further ado, let's get into it. We don't have that many names to talk about this afternoon, but there are still some good opportunities. Actually, talking about the ones yesterday, J-Bill and Lulu and what was the other one? It was, GDS didn't do well. Lulu chopped, Docu chopped, Oklo chopped. So much chop happens during OPEX week, so just something to keep in mind. If you're like me and you want to make sure that you're trading just the highest quality things, you don't want to just throw your money at random stocks reporting earnings, especially during OPEX week, which is this week. We have OPEX, that's monthly options expiring on Friday. And we also had FOMC today. So those are two pretty big catalysts. And that for me is kind of a red flag to stay away from a lot of earnings. At least stay away from the quantity, just look for quality. So to be honest, I have not played anything earnings this week. There are maybe like 2 or 3 names that I'm interested in, and 1 or 2 are today. But yeah, we'll look at everything and we'll find, like I said, we'll find just the highest quality setups. We don't want to just throw our money at the wall and see if it sticks. So with that being said, let's look at the first stock we have for today, which is D-Local. D-Local, DLO, has a good history of moves over 10%. It's done it 6 out of the last 8 quarters, which we always like. Very, very cheap stock price here. So one that I would fade just right off the bat. Narrative intel for D-Lo is pretty interesting. It is a sleeper re-rate option, which I like personally. It looks like they are involved in fintech growth. So yeah, payment infrastructure. So maybe they're kind of like a Bill.com play, or like what Square used to be, what XYZ Block used to be. It used to be Square. Bill.com kind of focuses on like small business, point of sale stuff. So maybe they're similar to that. Toast, T-O-S-T, is also in that fintech POS realm. So I'm just trying to think of stocks that are similar to this one. I don't really know much about D-Lo off the rip here. Looking at the strangle opportunities, nothing really interesting. It is kind of interesting that this stock has made 6 moves over 10% out of the last 2 years, and the 2 strikes that we are showing on the website aren't more than 10% out of the money. So that's interesting to me. It almost seems like this is a recipe for chop, but it's not one. It's not one that I'm interested in at all. The put does have slightly more volume, so I guess if I had to pick a side, I would say close to the money puts. But I feel like I'd be forcing something here on D-Lo, and I would suggest fading it. If you tuned in yesterday, we did talk about Oklo, we talked about Lulu. I think the only things that I kind of liked specifically were the JBL call and the WSM put, both of which went the opposite direction. JBL kind of went down, WSM went up. Neither hit a 10% move. So we did talk about not strangling those because they are not consistent movers. So if you just bought one side, it didn't work out, but that's okay. The market is always here and opportunities are endless, as you know. So D-Lo was the first today. Micron. So this is the big boy. This is the big boy reporting this week. It's definitely the most popular name reporting this week, other than I would say FedEx. FDX is tomorrow afternoon. Everyone should know Micron by now. one of the largest semiconductors companies in the world. They focus a lot on RAM. Well, they used to do RAM, selling RAM to retail. Now, I guess as of maybe a month or so ago, they came out and said they were only going to sell RAM commercially. I bought an SSD that is it's like a Crucial brand, but I guess Crucial is owned by Micron. So I own a Micron product myself, but it's just an SSD. It's not RAM. So I like the company personally. It is at all-time highs, and I will say be careful when you try and short something at all-time highs. For me, it's never really worked out, right? A trend in motion is much more likely to continue than it is reverse. So if I had to, like, just glancing at this, if I had to pick a side, I'd say up regardless, just because it's at all-time highs. And you don't ever want to short a blue sky breakout. Blue sky meaning there's no previous resistance in the chart prior to the present price. So Micron, decent, like I would say good, not great history of moves, right? Only 4 quarters out of the last 8 has it done a 10% up or down move. I do kind of want to call out a specific piece of information in a little bit, but we'll get there. And I think that has a lot to do with the moves number. But narrative intel is good for Micron. Data center infrastructure is hot. JBL was, they reported this morning. I'm not quite sure what the numbers were, but the stock didn't report positively. So that's something to keep an eye on because they are also in that data center world. Obviously why this matters. So Micron is one of the most important AI hardware suppliers right now. And the earnings often move the entire semiconductor complex. So I think if I was interested in trading Micron earnings, if I like that whole semiconductor sector, I would probably take a sympathy play. I don't know if I would trade Micron specifically. So obviously, as you know, there's a ton of semiconductor plays to look at. Just to throw a little nugget out there, I have seen some AMD puts come in on options flow in the past couple of days, but that means nothing. Just throwing it out there. There have been some AMD puts. So I don't know if that's in anticipation of Micron earnings or if it's something else, but something worth mentioning. The strangles that we're finding from Micron. Wow. So yeah, obviously a ton of volume, a ton of liquidity in these strikes and the option chains for Micron. The 500 call is being called out. Oh, as you can see, I did tweak what this looks like. So instead of all the contract prices being the same, now I'm showing you the high of the contract, the low for that contract, and then the last price traded, which I think is a little bit more helpful. So the 500 call, no more than 7% out of the money up. As such, those contracts are certainly pricier than I would spend on a lotto. And this is not a consistent mover on earnings. So this is definitely not a stock I would personally pay up for. It's not DEC, it's not RH, it's not Mongo. Any of those stocks, it makes sense, I think, to pay up and play within 10% of the money. On Micron, I'm not quite sure if I feel the same way. But the volume over open interest is really good here on the 500 call. 15,000 contracts, a little bit more than 15,000 bought and sold today versus 14,000 that were sitting on the chain. So that looks good. I would say the majority of these are probably bought, and that would make sense, right? We're not more than 7% out of the money, so we're close to the money, and we are betting up. That's kind of what that looks like to me. The 400p, 14.5% out of the money, a much, much cheaper contract. The high was 260. Right now, it's trading at around 130, which is close to the low of the day, as you can see. No, the volume does not exceed open interest on the put, but I can pretty much safely say that these are sold, or at least the majority of these are probably sold. They're probably on the bid. So if I had to guess, I would say Micron, a small move up. It doesn't look like a more than 10% move just based off of what we're finding here on the site. But I would, that's what I would guess if I had to. I'm not going to trade Micron myself. I don't even think I'm going to trade a sympathy. I'm going to wait for if I find something in the next 45 minutes that I like on the site, then maybe I'll buy a lotto for today. but the names tomorrow are ones that I'm a little bit more interested in. And for some reason, the Thursday afternoon movers have been kind of the best, right? Like we had Ulta last week, and that was a great move. So just something to note. That piece of information I was referring to earlier, in terms of why I think MU has only made 4 out of 8 moves over 10%. I think that has a lot to do with its float. It does have a pretty large float, 1.1 billion shares. That's pretty large. Obviously, the more shares that a stock has in its float, the harder it is for that price to move up and down. Or I'll just say the more liquidity it takes in order to move the price up and down. So something to keep in mind. But I like Micron, close to the money calls up if I absolutely had to pick. I don't think it's going to make a 10% move though. Five Below. So I think everyone knows Five Below, but I would put it in the same category as Dollar General, Dollar Tree, Ollie's. It's a dollar store. I think just they wanted to be the more bougie dollar store because it's $5, not $1. But at this point in 2026, $10 seems like $1. So I think all that is out the door. Regardless, not a great history of moves for Five Below. It's only made a 10% move in the last 2 years twice on an earnings report. So something to note there. The share price is good. I like $200 a share price. That means a 10% move up is $20, and a 10% move down is also $20. The narrative intel on Five is interesting. It is a sleeper re-rate. I always like those personally. It has looks like there's strong store expansion. There's and obviously value retail companies, it looks like are doing well. High growth retail that can gap if comps and store expansion remain strong. So if they come out in their earnings report and they say something like, we're expanding our stores across the country, or we're setting up more stores, that's something that could move the price tomorrow. Nothing there really stands out to me. I would say we'll look at the strangles. So strangles that we're finding for Five, we have the 240 call, which is too far out of the money. I would say this is too ambitious. So 12.5% out of the money up. This contract price, right, 57 cents a contract, that screams sold to me. That screams that it's on the bid. So I would immediately kind of ignore that. I don't like that. The 200p, so that's closer to the money. It's no more than 7% out of the money down. Volume is not exceeding open interest, but that's a pretty big volume number compared to open interest. And this contract price is not cheap. It's not expensive. I wouldn't say it's a juiced contract at all, but it's definitely not cheap. Looks like it last traded at 285. The low of the day was 240. So I kind of like this 200p for Five. I'm going to come back. I'm going to put a pin in this and come back to this later. But this to me looks like they're selling the call side. They're selling the out of the money call side and probably focusing more on the close to the money puts. That's what it looks like to me. But again, with FOMC today and OPEX on Friday, it's not quite as clear as it usually is. I'll just say that. So I'll come back to Five, but I do like the downside on Five. I'm not quite sure if I'll buy something there, but maybe. We have a lot of time today, which is great. The next one we'll look at is Red Cat Holdings, so RCAT, drone technology company. Drones have been a hot topic. I don't know if anyone has seen the IPO. I don't know, maybe the ticker is SWMR, but it's Swarmer. I just learned about it last night, but Swarmer is a drone company that IPO'd and was going crazy yesterday. I actually haven't checked it today, so I don't know what it is. But just worth mentioning, drones and defense drones, military government type stuff, that's a hot sector right now. So something to keep in mind. Not a great history of moves over 10%. It's only done it 3 times out of the last 2 years. And the share price is one that I would expect. I would expect it to have more moves over 10%. The cheaper the share price is, I always expect it to have a good history of moves on earnings. And so when something doesn't, I just get kind of disappointed. So just a little glimpse into that. Good narrative intel, like we mentioned, drones are hot. Defense autonomy is a very popular topic now with defense companies. Drone warfare and autonomous defense systems are one of the strongest defense narratives. Obviously, And there is a good chance for a guidance re-rate on RCAT. The strangles that we're pulling in, the 20 call and the 16p, I don't like any of these contract prices. I try to go for contract prices that are around the $1.50, $2 range myself. I just feel a little safer in those for some reason. And the 20 call being 14% out of the money up, I would say there's probably a mix of bought and sold. There's good volume over open interest there, so that definitely piques my interest. The 16p is 8.5% out of the money down, kind of around the same contract price. Volume not exceeding open interest. I would say it's really hard to see what's going on here. I would lean to the upside, especially with a 90-day chart like this, right? I mean, there is kind of a potential for a double top here, but I kind of see more upward movement in this chart. That's just me personally, but yeah, I mean, you could say there's a double top here with this January 20th, 22 spike. But I would lean to the upside here hesitantly. It's not one that I'm going to trade at all. But if you're thinking about RCAT, if you tuned into this live and you're like, oh, I hope he talks about RCAT, then I would say probably the upside, just because I kind of like this to break out of this little pattern. So RCAT, that's what we got there. We will move on to stocks reporting tomorrow morning. Now and as always, there aren't so I only have 4 stocks reporting on earningslottos.com for this afternoon. These are the only 4 that I think are worth trading for options lottos. That's all that means. There are definitely more companies reporting, but the companies that I include on the site have to have at least a minimum volume of 1,000 contracts traded in order to be considered for the website. I don't want to put us in stocks or trades that just have no liquidity and we can't get out of. So just if anyone was wondering, that's the reason why. So we'll move on tomorrow morning. So tomorrow morning we have SIG, which Signet Jewelers is actually one of the top candidates. That's actually the top candidate for this week. I will say personally, I have traded SIG before. I have experienced quarters where it's done great for me, and I've experienced quarters where it is chopped for me. So I'll just throw that out there. SIG, for some reason, I kind of compare SIG to Whirlpool. Also, Lamb Weston. I don't know why, but they all feel similar to me. So I don't know if that means anything. But SIG, we will look at the technicals and everything. So obviously, it's a retailer of diamonds. I think when that whole lab-grown diamond thing came out, I don't know when that kind of peaked, that the news or the interest around lab-grown stuff, but I don't really think it affected SIG stock price at all. So just that's just what I'm thinking about in the back of my head when I think of SIG. But yeah, diamond retailer trading at $80 a share, so a 10% move, 88, almost low 90s, and a 10% down, maybe low 70s or that range. Good number of moves out of 8 quarters over 10% up or down. We like that. We like a 10% expected move. 90-day chart definitely shows it pointing down. Narrative intel is interesting, so it is a sleeper re-rate, which I like. Luxury adjacent. Jewelry demand commentary can move the stock if margins surprise. So this is good. This can be positive and negative, right? If there's negative jewelry demand commentary, it can move the stock down. If there's positive jewelry demand commentary, it can move the stock up. So just that's what I would glean from that. The 90 call is showing up on the site compared to the 79p. And see, this is the stuff I like. This is what, if you can't see what I'm looking at right now, or if it doesn't jump out to you at the same time, then I'll explain to you what makes me so, what excites me about a view like this. So the 90 call, 12% out of the money up, right? The contract, it looks like it hit a high of 225 today. It's currently trading around its low of $1.15. A lot of volume, also a lot of open interest. That contract, this position to me, looks like the majority of it is sold. The 79 put is much, much, much more interesting to me. That is way more appealing than the 90 call. So the 79p, It's definitely pricier, right? Because it's closer to the money. So anything closer to the current strike price is going to be a little pricier, right? You get what you pay for. That makes sense. So at about 320, look at the volume over open interest here. 1,002 contracts bought and sold today versus 22 that were just sitting on the chain. So that to me shows immediacy. Tells me that traders were anticipating buying this 79p today. They wanted to wait today to buy it. So to me, it sounds like they got their best price. I think the majority of these are bought. I'm going to put a pin in this SIG puts and come back to it in a little bit. I want to look at if this 79p is bought or sold. But yeah, I kind of like the SIG downside. That is interesting. And the SIG, I want to say the float on SIG is pretty good as well for movements. 39 million shares. This is a really, really tiny float. So this stock can definitely move up and down. And I would say if we'll look at it in once we're done looking at all the ones reporting tomorrow morning, we'll look at the details of SIG, and if we can find maybe if we can find a 75, 72 strike for next week, that might be a safer play than buying something that expires not only on Friday, not only in 2 days, but in an OPEX week. So SIG puts we'll come back to, but I like those off the rip there. So Lunar Intuitive Machines is the next one we'll look at. Involved in space exploration. I think Lunar didn't they have like a lander, a moon lander that they tried to land on the moon and it landed like sideways or something, or it was like upside down. So that's when I think of Lunar, that's the first thing that comes to my mind is they had like a botched moon landing last year or the year before or something. I can't quite remember, but anyway, so yeah, they supply space products and services to support robotic and human exploration to Mars, the moon, blah, blah, blah. So if you're a flat earther, don't buy Lunar. But share price for Lunar, $18 a share. A decent history of moves over 10%. So five quarters out of the last 8, it has made a move 10% up or down. Not really saying much when the share price is $18. You're maybe looking at like a $1.75, $1.80 type move, but just something worth mentioning. Narrative intel for Lunar is great. There is a lot of torque and interest in commercial space, NASA missions, lunar infrastructure. Space exploration and lunar infrastructure are definitely emerging defense space narratives. We have Lunar, that's popular in that sector. We have ASTS, which is popular in that sector. Rocket Lab, RKLB. Fly, I don't know if Firefly counts. They report this week. I don't know if they're really involved in like aerospace type stuff, but for what it's worth, Lunar, ASTS, RKLB, those are kind of your 3 top space stocks. The strangles that we're pulling in for Lunar look like a recipe for chop to me. The 22p is way too far out of the money up, and it's a very, very cheap contract. The 15.5p is, I think, too far out of the money down, and it's also a cheap contract. IV on these is both over 200%, so I don't like Lunar at all for a trade on earnings. Maybe this is one that you can trade after. You can trade the IV crush on Lunar, but I would say Lunar is a safe fade just based off of the strangle that we're picking up here. If you know something I don't, maybe you're deep in that space sector, then disregard everything I said, but to me it looks like a fade. It looks like a choppy move. Duluth, we will look at, although it's a very, very, very cheap stock, like more of like an apparel type company, with kind of just some really weird brands. I don't know if I've heard of any of these. Dry on the fly, Duluth Trade. So yeah, I've heard of Duluth Trading Co. But yeah, all of this stuff, weird. Wild Boar, no yank, no polo shirt. I don't get that. Longtail tee, whatever. I don't know. This sounds like a big and tall type brand. Very niche. So I don't know. Anyways, $2 a share. I don't like that. Way too cheap. 5 out of 8 moves over 10% historically. That's not bad. And yeah, not finding liquid options for Duluth. So we're out on that. Don't like Duluth. Darden. So Darden, I think, is worth looking at a little bit more. It doesn't have a great history of moves over 10%. It has a good share price, $200, so 10% up, $20, 10% down, $20, so 180 or 220 are kind of what we're thinking about off the bat. They do so. Darden owns a lot of restaurants that you probably know and have heard of: Olive Garden, Longhorn. I've never heard of Cheddar Scratch Kitchen. Maybe that's like a Midwest or a West thing. Ruth's Chris, Yard House, Capital Grill, Capital Burger, Chewy's. Chewy's is big around here. I'm in the DC area, so yeah, all that stuff I know of. So Darden is one that just kind of piques my interest in that regard. But yeah, not a great history of moves over 10% in the last 2 years. It's only done it once. The narrative intel interests me. It's another sleeper re-rate option. Restaurants often move sharply on traffic and margin guidance. I went out to eat at a restaurant like a week or so ago, so I don't see any slowing down in restaurant traffic, but that's just me anecdotally, and anecdotal evidence means nothing. But the strangles that we're pulling in for Darden or DRI, we have the 210 call, which is pretty close to the money, 5%, almost 5% out of the money up. Pretty pricey contract as a result. The 170p, good volume over open interest, but a very, very cheap contract. So this to me looks like a very close to the money bet up, and they're selling the 170p. That's just kind of what I'm guessing looking at these strikes. So I would say Darden close to the money up. But maybe I'll come back and look at some out of the money stuff. I don't really like when a stock hasn't historically proven it can move 10% in an earnings report. But Darden, I would say if I had to choose, if I had to pick, I would say close to the money calls, very hesitantly close to the money calls. So that's Darden. Land's End, we'll look at retailer of clothing, accessories, blah, blah, blah. $13.79 a share. Not a great history of moves over 10%, even though it's quite a cheap stock. I always like to see more moves over 10%, the cheaper the share price gets. Not good narrative intel. It's kind of more of a retail grinder. Very limited institutional exposure to Land's End, it seems, or it looks like. And the strangles that we're pulling in for Land's End, I don't like these at all. I don't know why people are buying or selling 15-cent contracts on Land's End earnings. That seems like a new level of degeneracy if I've ever heard of it. But yeah, I don't like these at all. Nothing pops out to me or stands out about Land's End. So that's a safe fade. Caleres we'll look at, or Cal, looks like a footwear company. I don't really know much about Caleres. I guess they own Famous Footwear and Brand Portfolio. Never heard of those. $8.95 a share. Not great. I don't like that. Not a great history of moves over 10%. It's only done it 3 times out of the last 8 quarters or 2 years. This 90-day chart to me just looks like it's leaking. So I already off the bat I want to bet downside, but I'm not going to trade Cal at all. But I'm saying if I was, then I would definitely look at the downside here. Narrative intel is not great. Another one of those retail grinders, so very similar to Land's End in that regard. And these are disgusting strangle options. The 1250 call is way too far out of the money up, 40% out of the money. These are sold. The 5p, way too far out of the money down. These are certainly sold too. There is good volume there, but yeah, I think Cal is a safe fade. That looks gross. We'll look at Canadian Solar. So Canadian Solar, CSIQ, cheap share price, $18 a share. 2 moves out of 8 quarters over 10% up or down. Don't like that. Don't like the share price. Narrative intel is interesting. It is a solar or like an energy stock, which have kind of been a little hot for solar. Bloom Energy, Enphase made a pretty impressive move down on their last earnings report, although that was a while ago at this point. So obviously solar isn't as hot as AI, power, or nuclear, but it can still gap on project pipeline commentary, and that's positive or negative project pipeline commentary. The strangles that we're finding, looks like people are betting very close to the money as far as the calls go. Interesting that there's more volume over open interest on the 1650p, but that's way too cheap of a share price. So I think CSIQ is also a safe fade. I don't even think I would play a sympathy play on it either. Although I will say I have seen some First Solar FSLR call flow coming in the past, just in the past couple of days. I didn't know if that was related to Oklo earnings. It obviously wasn't, because Oklo didn't do anything on their earnings move. So just something worth mentioning. Baba, so Alibaba. So this is one that for some reason every quarter traders love focusing on Baba, and I think it's just because it's like it's China's Walmart, right? So everyone knows about Alibaba.com. But it's just such a I mean, as far as trading it, it's trash. It's not a good stock to trade. It's got a good share price. $135 a share is good. I like that. That means a 10% move is about $15 up or down. But as you can see, in the last 2 years, it's only done a 10% move once, and it has a pretty low expected move for this quarter's report. So I don't know. I'd have to be very persuaded into trading Baba. Narrative Intel is good for Baba. It's like we talked about. It's definitely one of the biggest China AI cloud infrastructure stories. Guidance on cloud or AI spend drives the narrative and could make it move. I'm a little bit more pessimistic on Baba making an impressive move after earnings, but that's just based on historical patterns. And the strangles that we're pulling in for Baba don't excite me at all either. The 150 call is too far out of the money up, too cheap of a contract. A lot of volume over open interest. So I would imagine the majority of this 26,000 number is sold or it's on the bid. The 130p is closer to the money, 3.5% out of the money down. And that's a good price contract for something that's so close to the money. So $1.60 is not expensive at all in the options world, and less than 5% out of the money is interesting. Now the volume is not exceeding open interest, but look at the amount of open interest that was on this 130p. 40,000 contracts have just been waiting there. They haven't been closed out prior to today. So that's interesting to me. I kind of would say if I had to pick, I would say bet on the Baba downside, but don't expect a huge move. Don't expect it to tank. Watch, I say that and now it's going to tank tomorrow. But don't expect it to make a massive move down. If you were interested in playing Baba already, you had some sort of conviction, I would just say be careful about the call side. Just to me, looking at these strangles, it definitely looks like the downside is a little bit more realistic. The float on Baba is massive too. So it's twice the amount that Micron has, 2.2 billion shares. That's very large. So that probably has a lot to do with why it hasn't made impressive earnings moves, because the share float is that large. So Baba to me looks like a fade, but if I had to pick, I would say close to the money on the downside for Baba. Accenture we'll look at. That's one of the leading IT. I think they do some defense stuff too. But one of the leading IT services, they provide consulting, system integration, and business process outsourcing to enterprises around the world. So customers from Accenture come from a variety of sectors: communications, media, health and product consumer. I want to say they also are a little bit into defense too. I know it doesn't say here, but I think they are. I think they do dabble a little bit in defense. Maybe I'm wrong there. I don't know. Another one that kind of gets, I don't know why, but I kind of see ACN being thrown around a lot during earnings. And to me, it's not appealing at all for playing on earnings. As you can see, it has never made a 10% move in the last 2 years. So that's immediately off my list. We'll still look at the narrative intel. We'll check out the strangles just in case something stands out. Narrative intel is interesting. It's a sleeper re-rate option, which I like. It's not a hot momentum name, but enterprise AI consulting demand can certainly re-rate the stock. Volume leaders for the strangles, kind of interesting. 225 call, 15.5% out of the money up. This certainly looks like a sold position. 190p, much closer to the money. good volume over open interest. I would say similar to Baba. I like the close to the money downside, but I would not recommend trading something that hasn't proven over the last 2 years that it can even make 10% move after an earnings report. So maybe it makes, but as you can see, I mean, the 190 is 3% out of the money down. So if you buy the 190, I mean, you really need it to go in the money, but you might not need a full 10% move. Maybe you need an 8 or 9% for this 190 to work. That's why it's so pricey. So Accenture to me looks like a fade. I only really care about 10% moves. That's why they are Lottos. I don't pay $300 a Lotto. Maybe I'll pay $300 for a total strangle, buying one out of the money call and one out of the money put. But one side for an earnings Lotto on a stock that hasn't made a 10% move in 2 years, no thanks. I am out. So Accenture is a fade for me. Tiger, we'll look at Up Fintech. It's a Chinese brokerage firm, somewhat of a newish type company. Cheap, very, very cheap share price, $7. 2 moves over 10% in the last eight quarters. Meh. Narrative Intel it's a sleeper re-rate. China fintech, online brokerage. It can move sharply if trading activity or margins surprise. If I compare it to a TTD or a trade desk stock, a little too uncertain, right? Trade desk tanked. Over the past year and a half, it had been tanking. Then I think the CEO came out and said that he bought a lot of shares, and so the price spiked, and then it just kind of fell after that. So just too much uncertainty in that whole brokerage. Like even Robinhood, trading Hood, I don't even want to do that anymore. That just kind of it all seems disgusting to me. I don't like anything on these strangles. They're very, very close to the money, so I'm not quite sure what's happening there. But the contract price is not appealing. And there's the volume is not exceeding open interest, which doesn't really speak anything to me. So I think Tiger or Up Fintech is a good fade as well. And then Satellogic, I guess we'll look at it. Looks like they operate satellite systems. They design them. They have not moved over 10% in 2 years. It's a very, very cheap share or stock price. And yeah, we're not even finding liquid options. So I'm out on that. All right, the one I wanted to look at was, what was it? I think it was not Micron. I think it was 5. 5 below. I wanted to look at the put. So let's do this. I have unusual whales. Let's do this. Let's search. Let's go for 5. Let's look at the chain here. What did we say it was? The 200p for this week. So we'll look at the 200p and find out what's going on there. And it looks like a lot of them are bought. So that there was 600. Oh yeah, I'll look at SIG again. Yeah, for sure. Yeah, SIG puts. That's what I wanted to look at. Yeah, thanks. Thank you for the reminder. So this is interesting. This 5 200p. These the majority of these are certainly bought today. It doesn't look like that was the same for yesterday. Looks like maybe there was a lot on. Actually, we can look at a 2 or 3 day. Let's look at 3 day, just so that we capture yesterday as well. Maybe it doesn't want to show us 3 day. All right, so yeah, there was a pretty big order on the bid on the set yesterday. So that was 1,000 contracts that were sold. And then today it looks like 600 bought and another 300 bought as well. So I have no idea what's going on here. Maybe there's a group that's selling and buying the 200p. I think you'd be forcing it playing 5. But it is interesting to know that there is a good chunk of these that were bought today. Albeit a ton were sold yesterday. Or, I mean, we really don't know if they are all sold. I mean, for me, looking at something like this, 1,001 contracts filled on the bid, that's pretty likely a sold position, right? What market maker is going to fill someone for 1,001 contracts on the bid if they're opening a position? Probably not many market makers. So if I had to guess, I would say that some of these are sold and some are bought, with definitely most of the premium being on the sold side. So I think 5 is a fade. I feel pretty safe about fading that now. Yeah, let's look at SIG. So the SIG one that I liked was the 79p. Let's check that out. You might be onto something, user. you might be onto something. Let's see, SIG. We said the 79p, they're all sold. Never mind. I'm off of it. So well, let's look at the call side. What was the call? Yeah, this 90 call is, but what's closer? So yeah, the 80. See how they're doing this? They're buying the 80 because it's so close to the money. It's going to say no side, but look at that. 4,400 contracts traded on the 80 call today for SIG. I think SIG looks like it's going to go up. I think a lot of these puts are sold, but I'm not going to pay, what is it? Not going to pay, what is it now? $390 a contract. Again, I'm not paying $390 a contract, especially during OPEX week. 90 call's got a lot of interest too, or volume too, but again, it's a no side. Whenever it's a no side, it means that the market makers are not letting us know if they're on the bid or the ask. And I think only very specific traders, you probably have to have a pretty impressive portfolio in order to get this kind of thing to happen, where it says no side. But I would imagine if I had to bet, look how similar the volume numbers are for the 80 and the 90. The 80 is probably bought, the 90 is probably sold. So it's a call spread. That's what it looks like to me. So whoever is doing this probably doesn't anticipate SIG to get higher than 90, but also not lower than 80. So looks like a choppy move up on SIG, and so I'm going to fade. I think it's a safe fade. It's got a good history of reports, right? 6 quarters, it's moved 10% up or down out of the last 8, but keep in mind with FOMC today and Friday being OPEX, that's just a dice I'm not willing to roll. I do want to look at, okay, so now that we've done that, let me make my earnings pick 'em, and then I'll get off a little bit earlier today. I think the one I did yesterday was Lulu up, and I think Lulu's up a little bit, so that was a good call. So Micron for today, I definitely want to trade Micron for earnings pick 'em. And what was the consensus? I think I wanted to say up. Let's look at this. Let's look at the 500. Let's look at it in unusual whales. Let's see what's going on there. So the 500 call, it's pricey. That's the thing I just don't like. I don't like how expensive that call is for something like Micron that has not proven it can consistently make 10% moves. Look at all this volume. That's crazy. This stock just gets lit up. So the 500 call is what we said. Look at that's a crazy amount of volume. 12 million, 12.3 million in premium just today is so crazy. A lot of this looks like it's, it's a mix, right? But a lot of it looks like it might be bought. There's 8,400 that were bought or that were at the ask and 73 that were on the bid. So that looks bought to me. I mean, that's 500 is I think that's too far out of the money. A 10% move off of 466, you're looking at obviously more than $40, 46, $47 maybe. So that would put it into 500 if it hits a 10% move, but it has only done a 10% move 4 times out of the last 8 quarters. And for me, that's just not consistent enough. If this were 7 or 8 or even 6, then I'd feel a little more comfortable about doing it, but I'm just not feeling it. I just think it's too much of a risk. That being said, I do like the upside for MU, so I'll bet up and I'll throw 500 in it. Actually, I want to protect my. We'll do 250. I want to protect. So, and as you can see, that's what everyone else on the site thinks too. 38.50 on up, only 600 on down. We'll do FedEx tomorrow, but for now I'll lock in my 250, my measly little 250 on Micron up. We'll get that placed. And that should do it for today. So I'm sorry to disappoint you guys by not throwing out any recommendations for trades today on earnings, but you know what? Sometimes not trading is the best thing you can do. And especially, like I've said multiple times this stream, especially during OPEX week, it is more important than ever to protect your portfolio so that you can continue to play earnings lottos. Play small, play often, but make sure that you're playing quality setups. And for today, I can't really safely suggest any quality setups. Don't shoot the messenger. if you had conviction on something, disregard everything I said. But if you only like playing earnings like me, and you want to play the highest quality setups, the highest EL scores, today I think is a good day to fade. So I hope, as always, I hope this was helpful. I'm sorry to shoot down your earnings dreams for today, but that's why we have earnings pick'em. It still lets me play or trade something. So even though I didn't have a Lulu position, I was rooting for it all morning and all day to go green, and so I think I got my wish. But yeah, that it just is what it is, right? The market is always there. If one of these pops or drops and goes crazy tomorrow, then it is what it is, right? You don't let FOMO get you. The market is always there. Opportunities are endless, especially in earnings. So WDC or ASML. Oh, okay. Okay, what up, X Project? So yeah, play Western Digital or ASML. So he's saying, yeah, so like we said earlier with sympathy plays on Micron. Yeah, sympathy plays on Micron. You want to look at WDC, so Western Digital, ASML, KLA Core or KLAC. Those are good sympathy plays for Micron. I wouldn't suggest playing Micron straight up. So yeah, great call out, X Project Group. Those are really good sympathies. I will see you all tomorrow around the same time, 3 p.m. Eastern. Again, it's kind of a light week, but I'll always get on here and go through all the stocks reporting just in case we can find some opportunities. Like the video, subscribe. Have a great rest of your day. See you tomorrow. Peace, everyone.